Welcome back, listeners and viewers, to the Money Mentor podcast. Once again, I'm Chad Williams, hosting on behalf of Infinity and Graham Hope, and I am joined, as always, by the star of the show, Dr. Andrew Wilson. Doc, how you been?
Yeah, good. Thanks for the star mention. I like that. But yeah, been good. We're trying to keep down in Sydney at the moment, and after being up in Queensland for a while. But I try to keep warm because it's very, very cold in Sydney. So I think it's almost record cold for this time of the year, but a very cold wind. But I'll be heading down to lovely sunny Melbourne next week. So maybe it'll be a bit different there. But we're not here to talk about the weather. We're here to talk about what's happened this week in our housing markets, and as usual, the latest with the data. So let's have a look at those slides so we can get up and running. And there we are. My Housing Market is my brand. We operate as independent housing market analysts. We have our own in-house data models as well, which we're going to look at next week with the latest July quarter housing market activity. But we're not here to talk about that today. But we are about the current state, particularly of housing markets, and that's what we do every week, don't we, Chad? We look at all the data as it's come out, and we're fresh off the press today because we've had the, which is going forward towards our Thursday publishing date. We've got the latest inflation data, and of course we've been looking forward to that because it will give us a signal as to the prospects for interest rates, which of course are very important for the housing market. And we have a Reserve Bank meeting next week after missing out one on July with the new system for the Reserve Bank. So we'll be looking closely at the results from inflation just to figure out what perhaps it means for inflation going forward. So it is the week ending Wednesday, July the 31st. We're going to look at the latest inflation data, also the latest building approvals data, which is showing some quite interesting trends, and the latest weekend auction results. So here we are, literally the middle of winter. We're heading into the end of winter next weekend with August. So that means we can start thinking about, yeah, you guessed it, the spring selling season. So what are the portents for the spring selling season with the latest weekend auction results? So lots of insights to be gleaned from our latest data as usual. So latest inflation data, it's a little bit of a funny day today, Chad, because in terms of the inflation data, because we're getting two sets of inflation data to sort of mull over. The first is the usual monthly data, which is for June, but we've also got the June quarter data for inflation release. So it's a little confusing. We are going to concentrate, I think, on the monthly data because I think that the introduction of that monthly set, which the ABS has done, because we're basically the only country on the planet, advanced economy, which didn't have a monthly inflation sort of model. We have one now. So I think we need to sort of look at that because it does tell us in a more real-time environment what's happening with inflation. And of course, that's very important in terms of the tracking for interest rates going forward. So inflation was lower. So we've got two, let's get a sort of a definition here. We've got two types, not only two models, but we've got two types of inflation. The first is called headline inflation, which is everything put together. And that's sort of the top rate or the top focus rate. It's headline inflation, it's called. Now, headline inflation actually fell over June down to 3.8%. So you're saying, hey, that's pretty good news. It's still above what the Reserve Bank is telling us its focus is, and that's 2 to 3%. But the focus for the Reserve Bank is not in headline inflation. It's what's called underlying inflation. So underlying inflation is a measure. There's a couple of measures, but the one the Reserve Bank uses is called the trimmed mean. And what that does is it takes out the volatile elements in the series. So they're the ones that are sort of very seasonal: housing, food, and fuel. So that's not included in the underlying rate. It's sort of it's trimmed, so you get a sort of like an average outcome over a period of time. So they look at and takes the volatile elements out of the measure. So the Reserve Bank looks at that because it's a more, I guess you could say, stable measure, and it's the rate that it says should be, according to the Reserve Bank's model, before ideally between 2 and 3%. So the target for the Reserve Bank for underlying inflation is 2 to 3%. And that's where it works its interest rate policy around. So if it's higher than 3%, we're talking higher or upward pressure on rates. If it's under 2%, then we're talking downward pressure on rates. Or, so basically that's a rule of thumb type, back of the envelope type of description of what we're doing with inflation. So we're a bit all over the shop today because when we look at the results for the month of June, we actually saw headline inflation fall to 3.8%. So that's good news, down from 4% the previous month. But however, we saw underlying inflation, which is the preferred measure, up to 4.1% from 4%, which again, the May one was higher than the previous April, which was 3.9%. So it's heading in the wrong direction, Chad, that underlying inflation, in terms of trying to get control of inflation into that 2 to 3% underlying target range for the RBA. Again, the significant contributors to headline inflation were housing, up 5.5%. That was following 5.2% rise over May. So this is the annual growth. So this is the year-on-year growth in costs for housing. We're up 5.5% compared to 5.2% over May. Food was steady, up 3.3%. And fuel was actually lower than the previous month, up by 6.6%. But that was lower than the big 9.3% annual increase. Now, we predicted this, that we would see fuel rise again, and it would impact inflation. But of course, fuel's not counted in underlying inflation. So it did affect the headline rate, but not as much as the previous month. So that's why one of the contributors was lower. But we've still got higher annual fuel costs to absorb over the next couple of months. So we need to keep a weather eye on that particular measure. So headline inflation down, sort of good news. And it's good news for consumers because it means the cost of everything has fallen over the month compared to the previous month. But in terms of interest rates, the underlying inflation rate was actually higher, which isn't good news in terms of looking for particularly a cut in interest rates going forward. So I hope that's as clear as mud. I think it is. And the annual results were the quarterly results were sort of similar to the monthly result, but we need to focus, I think, on this monthly result in terms of giving us a more real-time indication of what's happening in the market in terms of price changes. And there's our chart. You can see there, we came down, and this is underlying inflation. You can see with those post-COVID supply adjustments, we saw a big fall in inflation, underlying inflation, but we're now starting to see that trend reverse a bit. It has picked up, and a little bit of a concern there where we look at this is the annual change over the month when we see that up to 4.1%. And when we compare it to the US, US underlying inflation, just 2.3% now. They have a different target, Chad. They look at 2% as their target. So they're not there yet, but they're getting closer. And we're now well ahead of the US at 4.1%. But our interest rates are lower than the US interest rate. So I think we're, maybe finally we're looking at an interest rate cut in the US. Their inflation position is better. Their economy is still pretty strong. I'm actually not so sure, but the predictions now are for September interest rate cut. But the market's been so wrong with its predictions of US interest rate cuts. It's just almost you ignore what the market says. But the data has improved going forward, but it's still a very strong economy in the US. But as I said, we can see that trend is sort of moving in the wrong direction, particularly for those that are looking for an interest rate cut going forward. Okay, so that's inflation data. Yeah,
so there's still work to be done. It's plateauing at a level well above where it should be. It's not time to celebrate at all yet.
No. But I think that it's about steady as she goes to this point. But if we get another couple of months of higher inflation, I think that will put the Reserve Bank under some pressure in terms of maybe having to increase rates. But the positive thing was that we've seen rental increases just easing off a little bit, still high at over 7%, but lower than rental increases over May. But and as I said, fuel costs down a little bit as well. So, but that's a very volatile element, and unfortunately, we're seeing, not that this necessarily works its way into higher fuel costs, but we are seeing a bit more agitation in that Middle East war zone, which might get a bit nasty, or nastier going forward, which could impact oil supplies. So we need to keep a bit of a weather eye on that, and that would then work its way with higher fuel costs into higher inflation. But so far, sort of so good for steady as she goes. But a few little grey clouds on the horizon at the moment. So building approvals were up. They were down. We've got a typo there. Building approvals were down over June, but when we look at the trends, they're up for houses. So home building approvals were down by 7.2% over June. That followed a big rise in May, and that was all about volatile units. They go up and down, of course, because you can get very big developments coming in month by month. So units were down 19.7%, and that followed a big rise in May. So it was a little bit of that adjustment factor going through. Houses were basically steady, down just 0.5%. Queensland was the top performer, with total homes up by 14.6%. But annual growth levels still remain chronically depressed, with the quarterly trend low and flat. But we have some better news there. So these are the results. We saw houses down by 0.5%, units down 19.7% over the month. So that gave us a net of 7.2% fall. But the year so far, we've seen some good news there. Better news for houses. They're up 6.8%. Building approvals for houses over the first 6 months of this year compared to the same period last year. Units, however, continued to decline, down 13%. And overall, we're reasonably steady, with total development just down by 0.8% over the first half of this year compared to the same period last year. And the full year, so that's the fiscal year to 2024, June 2024, compared to the previous financial year, units down pretty solidly, 17.1%. Houses now, not so bad, still down, but we've got to remember they're coming off a very strong period from that home builder policy of the previous government. So net 7.6%. We're still undersupplied, but maybe if we look at some of the trends, the first trend is the national trend, just flattening out a bit, still below where it was a year ago. So this is overall housing taken on a quarterly basis. That's that dotted line, the trend line, just flattening out a bit. When we look at the the capital city results, as usual, we can see Melbourne well ahead there with total development there, and Sydney second, and Sydney just picking up a little bit compared to Perth, particularly, which has been surging ahead. So that's the position of the building approvals over the first 6 months of this year on a capital city basis. Melbourne, as usual, is the engine room for housing approvals. But when we see the results over this year so far versus the same period last year, Perth's really surged ahead there, with units up by very strongly, up by 112.8%, coming from a low base. But you can see how strong houses have performed in that Perth market over the year to date compared to the same period last year. Houses up 51.7%. Brisbane housing up strongly, and Melbourne housing up strongly as well. So some better news there in terms of housing over the year so far in some of the capitals. Melbourne, Brisbane and Perth are still a little subdued there in Sydney and Adelaide. So when we look at the national trend for capital cities, so this is the annual trend that gives us a real sense of that undersupply. We're still down 39% compared to the 2016 peak. And it is really units that have dragged that down. Units are now 60% below on the trend compared to their peak back in 2016. Houses, you can see the trend there, Chad, for houses, the black chart, the black column chart. It's now starting to move upwards quite solidly. So underlying trend for houses picking up, still below its pre-COVID peak, but nonetheless moving in the right direction. Not calling this yet. Still got a long, long way to go, but we're growing upwards, whereas units are still falling like a rock, down very strongly. Again, on the annual trends, and as I said, 60% below where we were at the previous peak in the annual trend back in 2016. So hence higher rents particularly, and an undersupplied housing market. And it's going to take some time for that unit market to turn itself around and get back to anything like, sort of longer term sustainable levels that we need to match all the demand in the market. And we can see there that in terms of the trends over the cycle, that everybody's down there. All the capital cities are well below their previous peaks, and Brisbane units are the one that's well down on its previous peak, even though units are in big demand in Brisbane. And that, Chad, is why prices are going through the roof for units in that Brisbane market, because they've just completely undersupplied that market now. And it's a real scramble to get hold of a unit, and prices are rising and rents are rising strongly in that Brisbane market, but really right across the board there, that undersupply is evident. So it's not about one or two capitals. It's all the capitals have stopped building, and hence we're getting tight rental markets, higher prices and higher rents. So we'll finally look at the latest weekend auction results. It is the last weekend of July, which means it's the last weekend of the midwinter auction market. And we've still got some heat there in that midwinter auction market. We've been saying this for a while now, but even though clearance rates are expected to fall away, and listings are expected to fall away, we've got all the school holidays behind us now. So it's a sort of a full market in that sense, no distractions. But we had solid results overall. Clearance rates were actually higher in all the capitals, despite those relatively high midwinter listings. So I expect to see more positive results through the beginning of August, because we're now heading into the spring selling season, which is just weeks away. Are you excited, Chad? Yes, you are. But certainly a very good foundation for the spring market. So you really can't. If your object is to talk down housing markets, you've got nothing to hang on to in terms of what's happening in the auction market, which is our best forward indicator of what's happening generally in housing markets as we continue to improve, and why we continue to focus on those weekend results. So let's have a look at Sydney. Auction numbers up in Sydney, still higher than where they were a year ago, but look at that clearance rate in Sydney, 74.2% for a July clearance rate. Now, yeah, we had a 76% last year, but that was a boom market because it was the bounce back from the weaker market in 2022. Plenty of sellers were looking for those value opportunities in the market a year ago, and we're still getting after solid to strong price growth over the past year. We still had a 74.2% clearance rate in Sydney, and auction numbers higher than the weekend before. So good results there. Melbourne also had a higher clearance rate, Chat, 65%. Melbourne's been, can I say, dragging the chain a little bit. There's still reasonable results there in Melbourne. Higher listings and a 65% clearance rate, but nowhere near where it was a year ago. As I said, that's when that market was at the top of its rebound, with a lot of buyers, a lot of buyer activity chasing, what was perceived to be bargains in the market. Well, certainly affordability advantages in the market. But the clearance rate again in Melbourne up from the previous weekend. Brisbane, another big weekend of auctions in Brisbane, 111 auctions, well ahead of a year ago and well ahead of the previous weekend, 52.1%, which was a higher clearance rate. And as we know, Brisbane market doesn't give us the same insights from clearance rates as the other markets. And 52% is actually a pretty good clearance rate for Brisbane, which usually tracks in the high 40s to low 50s. It has a different auction culture. Adelaide's been, its clearance rate was higher, Chad, but we've been so used to seeing that Adelaide clearance rate, high 70s, low 80s for so long. And last weekend was a real surprise the previous weekend in Adelaide, where we had 57.1%, which was just a crazy low number for Adelaide. But it's bounced back this weekend, 68.4%. But a little bit of a surprise there in Adelaide, maybe winter market taking hold there, some distracted activity. But still plenty of listings, 105 listings, and not so far away from where it was a year ago, Adelaide. So maybe some seasonal scenarios there. Canberra also bounced back with a higher clearance rate, getting back towards those 60% results we saw in Canberra a few weekends ago, which has sort of fallen off in the last couple of weekends, which I think was more a school holiday impact. But we're watching out for Canberra to see if it can revive. We've been talking that market up a little bit on the basis of those 60% plus clearance rates we did see coming through in late June and early July. So we'll keep an eye on Canberra as it works its way through the August auction market. So just looking at the trends, look at Sydney. Gee whiz, really picking up so far. Over the full July, well ahead of where it was over June. So some good results there for Sydney, and not far away from where it was a year ago. So some good results there. Melbourne, not so much, just easing a bit, still in the mid 60s, more or less. The Melbourne market's very much, and what we do see, particularly in Melbourne and Sydney, and this has an impact on price models, is that there are fewer higher priced properties in the market in Sydney and Melbourne. They have significant prestige markets. So during that July-August period, we really see a pause in prestige selling. Maybe they can afford to go on holidays more than the rest of us people out here. But so you get a different mix of property profiles in the market through winter in Melbourne and Sydney. There's a much higher proportion of lower priced properties in the market, and that can have some effect, not just on prices, but clearance rates. But yeah, Melbourne's still tracking in the mid 60s, but well below where it was a year ago. Similarly, Brisbane was at the end of that massive boom through the migration surge a year ago, but holding at, as we would typically see, Brisbane in the low 50s, and there's still plenty of prices growth in that Brisbane market, Chad, and we'll reveal all that next week with our latest house price report. Adelaide, yeah, like I said, down a little bit. Funny days in Adelaide compared to its normal results, but still just under 70%. So still a good result there for sellers, but maybe a little bit of a winter pause there happening in the Adelaide market. And Canberra, yeah, we've just gone off the ball a little bit over the previous few weekends after really looking the goods in June. So we need to watch what happens over August in Canberra to see if that market can bounce back again and start to match what typically it does in Sydney. So if you want those auction clearance rates, every Saturday night on my LinkedIn account, Doc Andrew Wilson at LinkedIn, around 6:30 we send out the capital city results, and you get the full national report on my LinkedIn, which includes the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales under the hammer on that day. And that's released around about 9 o'clock on a Sunday. So look out for that on my LinkedIn account. As we've mentioned every weekend, we're getting plenty of sales because of all those listings. Clearance rates holding up. We're 30% higher for sales in Sydney, auction sales, weekend auction sales over the period to July, first 7 months of this year compared to, the first 6 months, because we don't include January of this year compared to the same period. So Sydney's up 30%, Melbourne's up 22%, Brisbane's up 16%, Adelaide up 13%, and Canberra up nearly 3%. So lots of sales happening, near record sales over the first part of this year, if not record sales in some of those capitals over the first part of this year. So even though clearance rates have been a little softer, listings have been going through the roof, and that's brought up the actual number of sales. And we might start looking more at sales, as well as listings and clearance rates. We actually might look at the actual number of sales as well to give us another indication of what's happening in the market in terms of the underlying energy. If you want a copy of the latest national weekend auction market report, there is a QR code for those which have got their cameras handy. They can go click with their cameras, and that'll take them to a PDF copy of that of the latest report. As usual, we'll give a plug for our My Housing Market Infinity app, which will give you what's happening in every suburb in the country that has some data on listings. That's listings of properties for sale or for rent. That's the QR code to get there, to get a copy of that app. But you're going to have to go through Infinity to get the password, and they'll let you know what you've got to do to get that password. But it's a great little app because you can look at prices or rents in every capital city, in every suburb in Australia that has some data. You can filter it for the type of property, that's a townhouse, a unit, or a house. We're looking at Blacktown here with this screenshot. You can also filter it for the number of beds, and that'll give you the high price, the median price, and the low price currently, and the number of listings for sale. So that's a great little phone app that you can use to sort of look at what's happening on a daily basis, and it's updated daily to see what is happening in the market in terms of asking prices and in terms, and it's not just the median, it's the high and the low, and also the number of properties that are for sale. So a handy little tool there, covers all of Australia, and you can do exactly the same thing for rents as for prices, and we've got the screenshot for Blacktown there. Next week, July home prices, some very interesting results there, I can tell you, Chad, on home prices. Some still very strong growth happening in some of the capital city markets. Other capital city markets just easing a little bit. As I said, we can expect that at this time of the year, some seasonal effects. We've also got, hey, this is going to be very interesting, the RBA's August rate decision. We'll go through that in some detail, that RBA decision. We've sort of said the latest inflation data out today, which is very important, is sort of guiding us towards maybe probably a steady as she goes outlook for interest rates, which is probably, I think, a good thing for predictability and certainty in our markets, because changes in interest rates always cause disruptions which take some time to settle. And of course, we're going to look at the latest weekend auction results, which will be the first weekend of August, which is the last month of winter, and is just starting to, are we starting to see the blossom come out in the trees a little bit? You know what I'm talking about down in Melbourne. But as we get a precursor to the spring market, when will we see the first signs of spring activity with higher clearance rates and higher listings in our auction markets? Will it be next week or a couple more weeks at weekends into August? So that's it. If you want to have a look at this week's report, get your camera out if you like a textual reference, and that's a PDF copy of this week's report. So pretty good, mate. We've had a lot to cover. Interesting stuff with inflation, I thought. Probably reasonably predictable. I was a bit surprised headline inflation went down, but that was really a bounce back with a lower oil price. But, you know, hey, underlying inflation was up again. So, you know, we're still, I guess, sort of finally balanced, but I don't think we're anywhere near discussion at this stage for lower interest rates going forward. No. So are you looking forward to next weekend or next week, Chad's episode, when we see all those house prices over July, first with the latest, and also what's the Reserve Bank going to do, and how is it thinking with the latest data?
Doc, I think you got a bumper episode coming next week. I've had a look at some of the housing price data that you've put out on your LinkedIn page already. Get a little sneak peek for myself there, and there was one or two little surprises. And then I think the conversation next week around the RBA's interest rate decision, no matter which way they go or stay, I think there's always some contradictory commentary around it.
Oh, absolutely. Yeah, there's always a push. The problem is that a lot of the commentary is about change in the media, because the media loves change because it generates a headline. So was a lot of talk earlier, we're going to get an interest rate cut, which is pretty silly. And then we've had some talk lately that we're going to get, then we had interest rate rise talk, which Reserve Bank's really said it probably needs to be dragged kicking and screaming for an interest rate rise. In other words, it needs to see a very lengthy period of higher rates before that occurs. We've got higher inflation happening, but I think that they'll still wait and see a bit longer in terms of the emerging trend. But it'll be interesting to see what they say next week. But it's just another great week in the housing market, and I think every episode's a bumper episode, Chad, actually, if you ask me. But that's a point of debate, perhaps.
Look, Doc, it absolutely is. With your insights and with your data coming through every single week, it always helps. It helps us make decisions, and it helps us look forward into the future.
And that's what we're trying to do here, assist people in their buying and selling decisions, and those that just want to sort of understand what's happening in the market, free of all the sort of clickbait, that we get, and all the, extreme positions that people are just looking for attention. Don't make decisions based on those sort of extremities. We're here to provide, information, knowledge, data that you can act on with confidence.
Perfect. I look forward to some more good, honest data once again next week, Doc. Thank you very much, and we'll see you next week.
Thank you, Chad. Keep warm.